Fundsupermart.com.
Hi, what is the outlook for the various sectors within the commodities market?
I think it's mixed. I think we continue to be very positive for the energy sector. We have been overweight energy for a while. We still think that the drivers behind performance in the energy sectors are still there. It's a combination of geopolitical risk, problems on the production side, be it on the crude oil side or also the refined product side. And I think these are going to be continuing to be driving prices forward into next year. On the metal side, we're slightly more pessimistic. We think that there are some headwinds, be it linked to a slowdown of growth in China, but also whatever may happen on the currency side. I think with elections coming out in Europe, especially in Germany into next year, we may see a little bit of strength in USD, and that will have a slightly negative impact on metals prices.
What do you think will be the impact of QE3 on the various commodities prices?
I think it would be generally positive. We are getting a commoditative monetary policy that has been going on for a while, but it's starting to have some effect in the U.S. and we think that this will be generally positive for prices of commodities in general. I think the impact is likely to be more pronounced, more on the base metals and precious metal side, slightly less maybe in energy, but there are other drivers there already at play that are going to be helping prices. In grains, we think this is a market that is slightly less macro-driven, and after the big performance we had last year, this year, on account of the drought, we're likely to see the market trading a little bit more sideways going forward.
With the global economy expecting a slowdown in growth, what will be the performance drivers for commodities prices?
So as far as the energy complex is concerned, continuing uncertainty and geopolitical risk is going to be a key driver. I think we have a situation in the Middle East where the stability is gone after the events of the last 2 years. It's going to be very difficult to see stability come back to the region anytime soon. More on the metals and precious metals side of things, we think that increased quantitative easing, weakness in the dollar is likely to be a performance driver for those markets.
What are the main differences between gaining exposure to commodities versus exposure to spot prices versus investing in the companies operating in this sector?
I think when you buy shares into companies, you are affected not only by prices of commodities, but also by equity beta, multiples, and any kind of execution risk related to the operations of mines or exploration or productions of crude oil or other materials. When you're buying commodities, however, you don't get that kind of risk. You're getting direct exposure to the underlying commodity markets.